the committee's decisions on the monetary policy rate. So I'll start with the global front. On the global front, the easing of geopolitical tensions around mid-June proved short-lived. The renewed escalation of the conflict has led to another closure of the Strait of Hormuz and triggered instability in energy markets. Notwithstanding these developments, global economic activity has remained resilient, supported by substantial investments related to artificial intelligence, particularly in the United States and China, as well as the drawdown of crude oil inventories to ease supply pressures arising from the conflict. Consequently, the IMF projected global growth at 3% in July 2026, broadly unchanged from the April 2026 forecast of 3.1%. A further escalation of the conflict could, however, weaken the near-term growth outlook. Now, crude oil prices have rebounded above $85 per barrel following the renewed conflict. Together with supply chain disruptions, this is expected to further slow the pace of disinflation across several countries. In response, most central banks have paused their monetary policy rate cuts. Global financing conditions remain broadly accommodative in both advanced and emerging market economies. However, with heightened uncertainty and emerging inflationary pressures, financing conditions could tighten in the near term, with adverse implications for emerging developing economies such as Ghana. Domestically, economic activity remained resilient in the first quarter of 2026. Real GDP growth was 6.4%, driven by the services and industry sectors, compared with 6.2% growth recorded in the same quarter of 2026. The bank's Composite Index of Economic Activity, CIEA, which tracks high-frequency real sector indicators, pointed to a sustained increase in economic activity. The CIEA recorded annual growth of 13.4% in May 2026 compared with 4.4% in May 2025. Credit to the private sector, international trade activities, industrial production, and tourist arrivals all contributed to the improved economic performance during the period. The latest confidence surveys conducted in June 2026 showed positive consumer and business sentiments supported by optimism about growth prospects, subdued inflation, and declining lending rates. Headline inflation increased to 5.3% in June 2026 from 3.7% in May. The uptick was driven by increases in both food and non-food inflation. Food inflation rose to 3.9% in June 2026 from 3.3% in the preceding month. Similarly, non-food inflation increased to 6.3% from 4.1% over the same period. Despite the increase, inflation remained below the lower bound of the medium-term target band of 8 plus or minus 2%. The June inflation outturn was driven primarily by base effects and a temporary increase in transport fares, following the surge in crude oil prices that was experienced during the period. The bank's core inflation measure, which excludes energy and utilities, also increased in line with headline inflation. In addition, survey-based inflation expectations among consumers, businesses, and the banking sector rose broadly but remained anchored within the target band. Growth in monetary aggregates strengthened significantly in June 2026 compared with the previous year. Reserve money recorded annual growth of 31.7% in June 2026 compared with 2% a year ago. This reflected an increase in the net foreign assets of the central bank and the effect of changes in reserve requirements on banks' reserves. Similarly, broad money supply, or M2+, grew by 28.5% in June 2026 compared with 15.6% in June 2025. The expansion was driven mainly by a build-up in net foreign assets of the banking system. Now, in the money market, interest rates on government short-term instruments moderated. The yield on the 91-day benchmark Treasury bill declined to 5.3% in June 2026 from 14.7% a year earlier. In the same direction, the Ghana reference rate eased to 10% from 23.8% over the same period. Average lending rates for the banking sector also declined to 15.6% from 27% a year ago. In response to the eased cost of credit and stronger demand, private sector credit grew sharply by 41.2% in June 2026 compared with 8.6% in June 2025. In real terms, private sector credit growth stood at 34.1% year on year. On cash basis, fiscal performance in the first quarter broadly reflected strong expenditure restraint amid revenue shortfalls, resulting in better than targeted balances. The public debt stood at 720.8 billion Ghana cedis, equivalent to 45.1% of GDP at end May 2026, from 613.4 billion that represented 42.8% of GDP at end December 2025. The banking sector recorded robust performance in June 2026 with strong asset growth, improved solvency, and enhanced asset quality. The total assets increased by 30.7% to 502.4 billion cedis, supported by growth in deposits, borrowings, and shareholders' funds. Banks' solvency improved with the capital adequacy ratio at 20.4%, strengthened, with the non-performing loan ratio declining to 16.1% from 23.1% over the same period. Notwithstanding these improvements, elevated credit risk remained a key vulnerability, and continued adherence to prudential and regulatory measures are expected to further strengthen asset quality and reduce the level of NPLs across the industry. Now on the external sector, the sector recorded a strong performance in the first half of 2026, bolstered by robust export earnings, despite a sharp rise in the import bill due to higher energy and related costs associated with the Middle East conflict. The trade surplus improved significantly to $8.8 billion, up from $5.8 billion in the corresponding period of 2025, reflecting strong growth in gold and cocoa export proceeds. The current account surplus expanded to $5.1 billion from $4.1 billion in the same period last year. The stronger current account outturn, together with a larger capital account surplus, strengthened the overall balance of payments position. At the end of June, gross international reserves stood at $12.9 billion US, equivalent to 5 months of imports cover, down from $13.8 billion equivalent to 5.7 months of import cover at end December 2025. The decline in reserves reflected elevated energy-related payments arising from the Middle East crisis. Notwithstanding the decline, the current level of reserves provides adequate buffers for the economy to withstand external shocks. In the interbank market, the cedi came under demand pressures in May, but has since recovered. In the year to 17 July 2026, the cedi cumulatively depreciated by 9.5% against the US dollar. In taking the monetary policy decision, the MPC noted that the renewed Middle East conflict and associated disruption of trade routes have reignited volatility in energy markets. These developments could disrupt global supply chains and dampen global growth. Disinflation trends in several countries have stalled as energy prices have risen sharply, prompting many central banks to pause their monetary policy easing cycles in response to emerging inflationary risks. Although global financing conditions remain relatively accommodative, the persistence of these external shocks could result in tighter conditions with adverse effects transmitted through the trade and financial channels of emerging markets and developing economies. The MPC acknowledged that domestic growth has strengthened during the year, as evidenced by robust first quarter GDP growth and the latest CIEA outcomes. Positive business and consumer sentiments and an easing credit environment and a significant increase in private sector credit growth are expected to boost economic activity going forward. Continuing improvements in the trade balance and adequate reserve buffers, these are also expected to enhance the economy's capacity to navigate heightened global uncertainty. Recent price developments indicate that inflation has edged closer to the lower bound of the medium-term target band, driven largely by base drift effects. Inflation expectations and core inflation measures, these have also increased but remain broadly within the target band. The July forecast remains broadly unchanged from the previous MPC round, with headline inflation projected to rise gradually into the target band. Potential upward adjustments in utility tariffs, together with escalating geopolitical tensions in the Middle East and the associated increase in crude oil prices. These present upside risks to the inflation outlook. On the downside, continued fiscal consolidation and an appropriately calibrated monetary policy stance, these should help moderate these risks going forward. Now, given these considerations, the committee, the MPC, by a unanimous decision, maintained the monetary policy rate at 14.0%. The committee judged that the current policy stance remains appropriate to guide inflation into the medium-term target band while allowing time to assess the evolving geopolitical developments and their potential impact on the domestic economy. Now, on the informational note, the next Monetary Policy Committee meeting is scheduled for September 22nd to 24th, 2026. That meeting, as usual, will conclude on September 24th, 2026, with the announcement of the policy decision. Thank you.
Thank you very much, Chairman Dr. Johnson Pandit Asiama. If you've just joined us, this is the 131st MPC press briefing, and we just heard from the chairman the decision of the committee. The policy rate has been maintained at 14%. We are also live on Joy News, Ghana Web, BNFT, Daily Graphic, and of course on all the Bank of Ghana social media channels. So, members of the press, we just heard the chairman of the committee. So let's hear from you if you have any questions to that effect. Thank you. Please, as we do it, mention your name, the media house you represent, and of course, for brevity, let me repeat that for brevity, this is transcribed. And if it gets a bit more long-winded, it gets very difficult for us to put it out there. So simple, straight to the point. Thank you.
Good afternoon, Governor. My name is Joshua Asiama with the Business and Financial Times. So, during the opening of the MPC, you did mention concerns with regards to liquidity, and I don't understand what has been the impact of the CRR that was introduced, that was in May, and also in July. You mentioned that the bank had stopped financing that's Gold Board. What has been the impact so far? Thank you.
My name is Thomas Mary from Corporate Guardian Magazine. Just to add to what Joshua said right now, I want to know what has been the impact of the move from 56-day Bank of Ghana bills to 14-day Bank of Ghana bills in terms of your liquidity management. And secondly, so you mentioned that monetary growth has accelerated seriously over the past 1 year, from June this year against June last year. Now, under the current circumstances, are you looking at curbing liquidity growth as measured by N2 plus to curb inflation, even though it's below your lower band? Or are you looking at allowing monetary growth to remain heightened to further increase economic growth?
Yeah, my name is Norman Akwahi for the reports for Norman Report. Just to add to what Thomas said, Mr. Governor, I want to find out from you what threshold or evidence, if I will put it, would convince the MPC that this is no longer a temporary normalization. If you look at inflation as it is, that is no more a normalization, but a renewed inflation cycle requiring a policy rate increase. At what threshold or evidence do you need to be able to look at that, Mr. Governor?
Yeah. Please put the microphone. Yes. Okay, let's deal with these ones first. In total, we have about 5 questions, so we'll come back to you. Governor, I think we can take it.
Right. So, as usual, let's start with the last one first. Novan is asking whether this is the end of the cycle. Is that what you're asking? Whether we are seeing a renewed... Well, from the global scene, you are aware that there's a renewed, volatility, in terms of the crisis in the Middle East. At the last MPC meeting, I took the time to explain how that impacts on Ghana through higher energy prices and the likes. What that means is that impact, is expected to continue. We have seen core inflation also picking up, right now. The last MPC session, core inflation was on the decline. So there's been some changes in some of the underlying factors, for which reason we think that policy, has to take these into account. That notwithstanding, based on our projections, we believe that in the outlook, inflation will still fall within the target band. But that again requires that we stay vigilant on the risks going forward. If you ask me about my sense of the biggest threat to inflation going forward, I can give you a number of them. The global risk is the first one. Whatever happens in the Strait of Hormuz, if it turns out to be persistent, as I've always said, that could impact on the outlook. utility price adjustments, as you know, that also impacts on inflation going forward. So those are the upside risks that the committee considered. But that said, vigilance is the word. And through this policy action, we are taking the action to ensure that the risks in the outlook are properly contained. Then Toma was asking about monetary growth, right? Is that the case? And whether that poses any risk to inflation? Not exactly. The committee took note of the fact that reserve money growth has picked up, and the likes. But at this MPC round, that is not one of the upside risks that we have observed. And you asked about the movement from 56-day to 14-day and the likes. Well, the MPC conceptualizes monetary policy. And then the next leg is to implement that monetary policy conceptualized. And so it is down to liquidity management and how efficiently this is done. A number of tools that we use in doing this. There used to be the 56-day longer dated instrument that we made use of last year. We have, moved away from that. Currently, we use the 14-day, and then, of course, there's the overnight as well, the standard facility window. There are considerations to come down further to possibly introduce a 7-day going forward, but we'll let you know when that change occurs. But in all this, what we seek to do is to manage liquidity efficiently. When we achieve that, we are able to attain our inflation objective. And so we continuously assess these on a weekly basis, the liquidity conditions in the system, and we adjust these instruments accordingly. So that is what has been going on. Then the first one, whether the Bank of Ghana has stopped financing the gold board. Yes, I mentioned that on Monday, with effect from July 1st, this month. Bank of Ghana is no longer funding or we are going to move away from funding the gold board, alone, to a regime where we are no longer, running the transaction like the way it used to be. That also means that the cost of those activities, as we communicated, these are quasi-fiscal activities, and so government has stepped in. I believe in the mid-year budget statement tomorrow, you will hear the Minister of Finance make some statements in that regard. The implications of that, number one, is that it would sort of reduce the pressure on our financials going forward. But let me also emphasize that what Gold Board does is an important part, of our framework on exchange rate management. And so there would be greater efficiency. I believe that the cost of the ASM gold transaction will go down, and together we'll be able to manage the exchange rate more efficiently. But it will be done as a quasi-fiscal policy or fiscal policy going forward. Then there was the first question was about liquidity impact. I did not get that quite well. The impact of the CRR, the change in CRR at the last MPC round. Well, it's still early days, but we've been able to withdraw over 12 billion or so. Head of financial markets, about 12 billion thereabout from the system. In terms of liquidity management, we have attained our objectives. All banks are compliant, with that new framework currently. But like I explained at the last MPC round, remember the CRR rate used to be somewhere around 8% or 9% for a long time. And so we are in transition. Ultimately, we will get there. We are aware that a couple of banks, due to their peculiar nature, may have some asymmetric, impact of this policy. We are in discussions with them in that regard. But we are in transition. And we are observing the impact of that. But so far, so good. We think that our objectives have been attained. Then that's all for this round. Okay, thank you.
Thank you very much, Chairman Dr. Johnson Pandit Asiama. Yes, let me take a call first. Then Suleiman, you can follow. Thank you.
Hello. Yeah, my name is Adnan. Come in. You are not echo. Thank you, Governor. Governor, just back on the gold ball thing, I didn't get you quite clearly. If you stop giving seed funding to Gold Board, how do they get funding to continue their operations? How do you then get to buy something you haven't invested in? Would you buy it on the open market? How do you buy it? And we also understand they may be selling some FX to commercial banks. Can you please give us a bit more clarity? It will help everybody. And finally, will that complement or substitute your regulatory intermediation, especially with regards to the currencies you do with banks? Thank you. All right. My name is Adnan Adams. I work for the News Guide. My question is on the private sector credit.
So that's the announcement from the governor of the Bank of Ghana. The monetary policy rate has been maintained at 14%. Let's get more on this and go on Zoom right now and speak to Professor Williams Pepra. We will also come into the studio and speak to Joy Business Editor George Wiafe. George, but in the meantime, we have to go on Zoom and engage Professor Williams Pepra. Professor Pepra, welcome to the program. What do you make of the new announcement by the governor of the Bank of Ghana?
Good afternoon to you, and good afternoon to your cherished viewers. Listening to him carefully and also looking at what is happening globally, the MPC looked at two main things, and that is what we normally, when you are doing these kind of things, you look out for. What is the inflation expectations, which is driven by both domestic and external factors. And then what is the core inflationary pressures? So if you look at what is happening externally, especially in the Far East, there is this still ongoing war between U.S. and Iran, which puts us in an unknown uncertainty. Let me put it in that way. So they try to be very more careful in their decision. So the 14% rate is a wait-and-see attitude. And if you listen carefully to the governor, he said if we were to ask him his greatest worry is this global event of this war in Iraq, because it has a lot of impact affecting energy. And one major issue he talked about, which I'll come back to it again, which is when he's mentioned that Ghana's gross domestic drawdown reduced in a little bit. And he mentioned that the main driver was the energy cost. And the energy cost is going up all because of what is happening in the Strait of Hormuz.
Okay.
25% of crude comes from there, and if there's that uncertainty, it can really affect the global market. And Ghana is not left out.
The governor also spoke about the fact that they have, effective the 1st of July, stopped financing Gold Board. What do you think are the likely implications from this new directive from the central bank?
So, I mean, the Gold Bond model, as we all know, is going to be changed. It's going to affect where they get financing from. So, in the Bank of Ghana was giving them loans to do the purchasing. I'm hoping that the finance minister tomorrow will have to tell us that yes, he has given a lot of money in terms of equity, government equity, Gold Board to be able to run that part of operation. Or they are allowing Gold Board to go into the open market to borrow. My fear is that if Gold Board goes to the open markets to borrow, we may see a little bit of crowding out because all some banks will prefer to deal with a company that buys and sells gold. So that is the only major impact. Let's admit, the gold bond model is what has been able to strengthen our currency. So even though the central bank is not going to give them facilities, but there are other tools that they can and technical advice they can still give to the gold board. I know the governor himself sits on the gold board, so he will share information with them for them to know that, hey, what you are doing really impacts our operations. So this is very something that is very key. Just let me mention, for gold board to be very successful, I'm expecting the finance minister tomorrow to tell us that yes, in a lot of money in terms of Ghana's equity will have to be given to them to be able to support the gold board operation.
Well, the minority also held a press conference earlier, which they say, I told you so, in their own words, about the withdrawal of support from the Bank of Ghana to the gold board. Of course, it's early days yet. It's less than a month since that directive came into effect. But in hindsight, do you think that this shouldn't have happened in the first place, the withdrawal of support from the Bank of Ghana?
So let me say that the gold board model just started with this new government, and someone had to provide some funding anyway. So at the time, we all know the financial pressures on government in terms of from the ministry. So the Bank of Ghana was used as a tool to support gold board.
Right.
So if gold board, Bank of Ghana is hesitating now or has hesitated, it means that gold board must be financed. And I'm sure for their operations, 1 year and 6 months, by now they would have had a lot of capital or liquidity to be able to continue their operation. What I'm envisaging is that probably maybe gold board will be more careful with their expenditure plans.
Right.
Because they're not going to get that kind of free money from Bank of Ghana, and they have to focus more on their core mandate. We noticed that recently, though it is part of their mandate, they signed some agreement with Ghana Water and I think with some reclamation activities. They may have to be very careful with those activities, extra activities, so that it does not affect the amount of capital they need to go into buying and selling of gold if needed.
Right. Williams Pepra is a professor of finance at Andrews University in the USA. Thank you very much for always heeding to our calls, Professor Pepra. Let's take you back to the central bank where the governor, Dr. Addison, is still addressing the press. Dr. Asiama, I beg your pardon, is still addressing the press.
To fall, we will see greater recourse to private sector lending by the banks. I mentioned a number of things we are doing, to support credit provision by banks. I mentioned, for example, the new digital credit we are bringing on board. We are working with banks to strengthen their risk management frameworks, and the likes to be able to give greater credit. Several other measures we are introducing, we should see private sector credit at higher levels. Then ECO, my good friend, was asking about gold board in terms of what we are going to do next. ECO, we are still in discussions with them. From where we are now, gold board has a number of choices. Either government takes up its funding entirely, or resort to the markets, the use of the markets to fund it. And then when the markets fund it, what happens to the effects that are associated? We still have a role, but that context is still being discussed with the gold board, and I'm sure the market will be informed very soon. You were asking if that will complement what we are doing now. Certainly yes. Certainly yes. Remember last year, the impact on our financials was quite significant. So since then, a number of steps have been taken, and this change is actually part of the reforms so that we continue to benefit from the activities of Gold Board, but then at the same time, we stem the impact on the central bank's balance sheet. I believe that is all. That is all for the second round.
That's all for the second round, Governor. So if you just joined us, this is the 131st MPC press briefing, and the monetary policy rate has been maintained at 14%. We are also live on City FM, and at this point, let me use this opportunity to to welcome our observers from the University of Ghana, specifically from the Department of Economics and the University of Ghana Business School. Most welcome to your first MPC press briefing. Right, so next round of questions.
Hello. Thank you. This is Moses, also from Bloomberg. Governor, what is your forecast for economic growth after what we've seen for the first half? And do you think the resurgence of conflict in the Middle East could have any impact on your outlook?
Governor, my name is James Eshan with Joy News. Governor, I want to know, foreign reserves declined to $12.9 billion. I just want to understand, should Ghanaians be concerned about the pace of reserve depletion if the geopolitical tension persists? And also, how long can our reserves withstand the external shock if crude oil should go above 115, especially with respect to the fact that you made mention of the fact that energy pressures caused us more than 1 billion decline in reserves?
James Taylor. Good afternoon. My name is Francis Into. I work with the Ghana News Agency. First, I want to find out, to make mention that the city has seen a recovery. How long can this recovery be, considering the continuing volatility on the global front? And I also want to find out the updates on the non-interest banking. The last time we met, you made mention that one bank has applied for a license. What's the process so far? And I also know that other banks are in the process of applying. Where have they reached so far? Thank you.
Hello, can I ask a question? I'm Isaac Adu from the High Street Journal. And if you have, at what stage is it? Then also, what's the latest on SG's planned exit from Ghana? The last one is, Standard Chartered has announced its exit from retail operations in Ghana. What's your reaction to that? Thank you.
Right, so that's the end of questions for this round, please. Governor. Yes.
All right. Thank you very much. So again, let's start from the last one. The planned exit of SG Bank. It's on course. This is a process normally. You have to go through a number of stages. We made some progress. We are in touch with them. And that transaction is ongoing. I would want to leave it there. If you want further details, you may have to speak to SG directly. Then the next one, if we can confirm, which was that? Women's Bank. Well, we are in discussions with government. It's not a new concept. It's something we've been discussing with government since last year. Some approaches have been made. To license a bank is also a process. There are requirements, there are reviews, we have to cross-check, some of the data. So we are involved in that stage. I'm sure tomorrow in the mid-year budget, the Minister of Finance may, make some pronouncement to that effect. But all I can say is, for now, we are in touch with them, discussing that issue. Then the non-interest banking, that also is a new innovation we are bringing on board. So far, we have received one application. Yes, you are right. We are reviewing that. We are open to receiving, other applications. They will be dealt with accordingly. And if found to be adequate, we will go ahead to the next stage of licensing. But for now, all I can say is that we are reviewing the application that has come on board. We'll let you know when that review is complete. Then on the CD, how long can these... Well, when you have a global shock, just as any other country, there are a few ways it impacts on your country. Either if you have a flexible exchange rate regime, as we have, the exchange rate may take some of the pressure, or your international reserves may take part. That is just a way for the country to adjust to that global shock, as you know, up to this point. Now, Moses, was it Moses? Someone else asked about reserves depletion. I don't think I want to call it a reserves depletion at this point. I remember these were, expenditures. These were, certain expenses that had to be covered. Remember, there was a repayment of a sovereign bond or so, right? Director of Research. There was a repayment of how much? 700 something. There are related, government payments that have to be made, all types of imports that have to be funded, and then the greater oil bills, right? That also have to be settled, and so these were legitimate, uses of the foreign exchange that was done. Going forward, we are looking at ways, to adjust to that shock if it turns out to be a permanent one. Rest assured, our reserves will not get depleted. Our trade our trade balance is still in surplus, right? The capital account is still in surplus. And so what it means is we have to look at other ways of earning foreign exchange. And that will be done. We'll make sure that our reserves level remains at comfortable levels going forward. And that is if the global shock turns out to be a permanent one. The question by Moses, I missed it a little bit. Moses, can you... The forecast for the year, around 6%. Put it around 6%. From as of now, around 6%. Well, yes, the Middle East conflict, it will have an effect. I've explained the channels of transmission, right? The trade channel, the energy price channel, and what have you. Let's hope somehow a solution is found. A few weeks ago, we were all relieved. We thought, after signing that MOU, the parties were going to, settle for peace. Unfortunately, things change rapidly. So we are observing by the day to make sure that the gains we have made so far are protected.
Can I ask a quick follow-up question?
Yes.
Yeah, so related to gold board, assuming they start FX auctions, would the central bank participate as, like their commercial banks?
So I mentioned earlier that we're still in talks with both the gold board and Ministry of Finance on the specifics when it comes to, that entire transaction going forward. I will hesitate to give you specific answers as of now. But after we are done with the negotiations, we will now be able to tell you the role the central bank will play going forward. But whatever it is, and whatever relationship we end up with, it will support the framework that we have currently.
On Stanchart's planned exit, whether we have a comment on that.
Oh, yes. So as of now, we have received that notice from Stanchart. We have asked them to give us specific details, and we are waiting to receive those details, and then we can take it forward. That is all I can say at this point.
Thank you very much, Chairman Dr. Johnson Pandit Asiama. Before we go to the last round of questions, let me remind you that the chairman of the committee is here with other members of the MPC. And just by way of information, the MPC is made up of 7 members. We have the governor as the chair. We have the first deputy governor, Dr. Zachary Mumuni, who is right here with us. We have the second deputy governor, Mrs. Matilda Santies-Yedu. Dr. Philippa Bredio, too, who is the head of our research department. Mr. Gejon Ablezo, head of Treasury, or the head of Treasury, Professor Abo, is also here, and Professor Festus Ebo Texan. Professor Abo is at the University of Ghana Business School, and Professor Ebo Texan with the University of Ghana Economics Department. So we'll do the last round of questions. Not so fast, not so fast. And again, I'll remind you to be, quite straight to the point and keep out the narratives to a very large extent. Thank you.
Kingsley, sorry, Ghanaian Times. Governor, I want to find out the value of unclaimed balances of banks being held by the Bank of Ghana. What has been the trajectory over the years, and what is the money being used for? Thank you.
Okay. All right. Thank you very much, Governor. In November 2024, you issued a climate-related financial risk directive asking banks and non-banks and SDIs to develop climate policies. You said the banks should have it on their tables by January 2026 and SDIs and non-banks by January 2027. I'd like to know, with what we recorded in June, when it comes to flooding, are the banks adhering to this, and how have they mitigated the risk that they recorded with the policies that they drafted? Thank you.
And then, thank you very much. My name is Justice from the Shinwa News Agency. So, talking about setting up a new state bank. So, some stakeholders have been, clamoring for the central bank to dispose of its interests in some of these state banks, for instance, ADB, and then the other one, NIB, and so on. So I would like to find out if there's been any discussion as how the bank is going to dispose of these interests. For instance, you have SIGA, which is the state interest and governance agency, which is supposed to be holding the interest of the state in such businesses. So has there been any discussion in that direction as to where and...
It's me, Azar.
Hey, you look fresh.
Wait till you see what's inside me.
Azar, for greater coverage and colors that last longer. Azar, #1 from Azar Group.
Consumer and business confidence have declined for 2 consecutive rounds. What is the reason for this, if you can share with us? And then what is the bank doing to restore confidence? Thank you.
Okay, my name is Bright. I work with Metro TV, finally. Governor, in your answering the reserve question, you mentioned that some of the reserve have been used to pay make some expenditures. Please, are you able to tell us how much is spent on that difference, the 1.2 billion that we are reading as being the difference from the reserve shortfall? And then you say we shouldn't say depletion, but it's rather something else. Could you please explain that? And this is the 3rd consecutive time that the monetary policy rate is at 14%. Is there any, what is the actual reason why we're maintaining it here? What is working and what is not working? Thank you.
Governor, my name is Belinda Anand-Kwanzaa from Wiza TV. Governor, despite the sharp decline in Treasury bill yields and average lending rates, they're still borrowing with businesses, and they say it's very, very expensive. Is the bank satisfied that the benefits of lower interest rates are reaching businesses quickly enough? Thank you.
Please, Right.
Mr. Governor. Well, we'll come to the last question.
We are done. Okay. So I'll pick them one after the other. Why the monetary policy rate has been maintained for 3 consecutive meetings. So our decisions are always based on the balance of risks. You know, there are factors based on our assessment that pose upside risk. There are other factors that pose downside risk. You know, talking about inflation, talking about growth. So at the end of the day, it's the balance of that you know, those 2 types of factors and where they are tilting towards. That is what informs the decision. And remember, the decision is not taken by just me. There are 7 of us. So there's a submission by each member. Since last year, we've moved on to, you know, not just a consensus, but towards a majority decision. So the decision is based on what the majority of the 7 members, you know, decide. And then that becomes binding on everybody. So that is why you see the MPC rate being maintained in the last 3 MPC sessions. In the last 2, rather. It's just based on the assessments by the MPC members. Then the question on climate-related, you know, guidelines that we have issued to the banks. As you mentioned, they have up to January 2026 or so in the case of banks, 2027 in the case of banks, and then later on in the case of others. It's still early days. It's still early days indeed. But I agree with you. The experience with the recent flooding, you know, problem proves that we need to take these risks seriously, you know, going forward. And we will do that as a central bank to make sure that the credit decisions that are made by the commercial banks, they always integrate environmental concerns in making those decisions. Then Adoboe was asking about Bank of Ghana disposing of its shares in banks. Well, very much so. I can tell you in the case of Agri Development Bank, we still have some residual shares. Is it about 13% or something? Yes, in ADB. The Bank of Ghana board has taken the decision that we should dispose of, you know, that shareholding. And so with time, I'm sure later this year that will be done. Remember the elephant in the room, the global financial shocks that we are contending with. Yes, it is being felt by local consumers and then also the businesses, so it's not surprising. At the MPC, we also take some presentation from the Chartered Institute of Bankers. They also conduct some surveys, very, very interesting survey that they presented to us. We have assessed all those. We believe that at this point, you know, we do understand that any sort of changes in assessments is largely because of what we are experiencing by way of the global shocks. Then next question, I saw benefits of lower interest rates. Lower interest rates are good for everyone. Private sector people can, you know, borrow lower. We are still committed to that. We want to see businesses, you know, access funding, you know, cheaper funding, because then they can expand, they can create jobs. But it's a process. And as you know, as running an economy, you always, you know, you are faced with global shocks, you are faced with domestic shocks, you are faced with exogenous shocks. When those shocks come in your way, you need to adjust to them. And so we believe that by the time these shocks we are facing now edge out, we will see a return to that lower interest trend that we're seeing from last year.
You've been listening to the press conference by the Governor of the Bank of Ghana, Dr. Pandit Asiama, up there. Let's come into the studio and speak to Joy Business Editor George Uyafe, who's also joining me in the studio with more. George, what do you make so far of the announcement by the Governor of the Bank of Ghana, first with the maintaining the monetary policy rate at 14%?
I mean, if you've been following the market, it was expected. The Governor of the Bank of Ghana has always maintained that it's about the data and the data. And what is the data saying? The data was pointing to a possibly maintaining the rate or a hike to try and check inflation. What is the main mandate of the Bank of Ghana? What they look at is what they call the inflation targeting. All the monetary policy tools available to them, how can they check inflation to ensure that it is within their band or target so that they control the liquidity in the system and ensure that it doesn't impact on the Ghana cedi. What is this whole policy rate about? This is one of the several monetary tools that the Bank of Ghana uses to check inflation in the economy. That is the rate at which they will lend to the commercial banks when they come to lend to them. So if that rate is high, the commercial banks, not being for the Christmas, they will also pass on that cost to you. And that goes a long way to try and make it difficult to access funding in trying to mop up what the Bank of Ghana would always want to call the excess liquidity in the system. Now, the Bank of Ghana, when they met over the past 2 days, they've reviewed a lot of things. Indeed, the governor highlights how development in the Strait of Hormuz is impacting on the economy. Right. Crude prices are going up. I think we should be within the 90 range as we speak right now. And what does it mean? The governor talked about how our international reserves are depleted by more than $1 billion, and that was due to energy-related cost. It means that we are now spending more to bring in the same volumes of crude for power generation and also finished petroleum products to the pumps and even power-generated machines as well. And that has impacted on the reserves as well. Recently, government also made some payments to the Eurobond holders. And that is where, indeed, the governor is saying that if the situation should persist, it could come with some challenges for the economy. The governor was also talking about the fact that he is worried about the impact on inflation going forward and utility tariffs, because if the inflation will go up, it will also be fueled by the utility tariffs also going up and even transport fares as well. And he has raised all these issues. But he thinks that if the development or rising crude prices is the major reason here, when the 7 members met, they thought that, you know something, let's still try and observe things a little bit, more of the wait-and-see attitude before we respond. And that is why they, by what he says, a majority decision, they decided to hold the rates at what they call 14%. What goes into that? But if you ask that, so what would this mean for businesses? Well, right now, the major benchmark for reviewing or assessing rates here in Ghana is what they call the Ghana reference rate. Now, there's a fraction that looks at the Treasury bills rate, there's a fraction that looks at the interbank lending, then there's a fraction that looks at the policy rate. Right. So if the development on the Treasury bills market doesn't change that much, and the economists will say all other things being equal, we don't see government being forced to hike the rate to try and mop up more, then there's a likelihood that for the next 2 months, you might not see cost of borrowing, or if you are servicing a loan, seeing that much cost going up because of the decision that the Bank of Ghana has taken. Because if the policy is being kept at the same rate, if there isn't any significant movement on the T-bill rate, and there isn't any significant movement on the interbank lending cost as well, then that what you should look at this is saying that the cost of credit will remain virtually, there won't be much movement when it comes to interest rates, or it'll be more expensive now to service your current loan.
Now there's more Kivo inside. More to enjoy, more to share. Fortified with iron, zinc, and vitamin A.
Concerns about the energy cost and how that he's also given us some signals that, listen, if this development in the Middle East should continue, you will see the reserves being depleted. You will see the city taking a hit. But the good thing is that is the reason why last year they moved fast to build up more reserves. If you have a reserve that can stand about more than 5 months of import cover or 5 months of import cover, it means that you've gotten to that place where you can now absorb the shocks a little bit. But when you see the exchange rate going down, don't run. I said it. We will see the reserves taking a hit a little bit.
Right.
But some will say that maybe these developments in the Middle East might not last that long. But if you should continue, your reserves are going to take a hit. Your cedi will depreciate a little bit. Last month we saw appreciation. This month he's done almost 2% depreciation. And so we could see some blips. But again, he gave us some assurance that if they are working with the inflation targeting when they want to watch inflation and act and hike the inflation, hike their policy rates and all those things, he thinks that going forward this year, they will still be within that band of the 8% plus 2 or minus 2, meaning that we could end up with the year with inflation being at 10%, 2%, or maybe 7 or 6%. So they might not take any drastic actions that could change the course of things or how things will look at. And for me, these are some of the things that I took from it. But again, if you look at their decision to stop financing Gold Board, he's saying that now the GOG or the Ministry of Finance will now step in. The good thing here is that what they were using to finance this, BoG can hold on. If they're using FX and all those things, so even if it's the Ghana cedi, they can hold on that one, which could have an implication on inflation. And also that use those FX, or even if it's Ghana cedi, to finance other critical things in the economy as well. So you might look at that and see that that should be bad news. But from the governor, he's looking at the bigger picture about how do I use this action to check liquidity in the market, which will now be positive for us when it comes to inflation. And also we can use that money to finance other things, critical petroleum imports, medical imports, and maybe financing crude imports to actually support power production when it comes to our various plants in the country.
George Riafe there. He's Joy Business Editor here at the Multimedia Group. Thank you very much for that in-depth analysis, George. Now, the minority is challenging government to explain how it intends to meet its revenue target after missing first quarter projections. Ranking member on the Economy and Development Committee in Parliament, Kojo Nkrumah, says both tax collections and oil revenues are falling below expectations, creating what he describes as a widening revenue gap. He says if government intends to maintain its revenue target, the finance minister must explain where the additional revenue will come from without introducing new taxes or placing more pressure on households and businesses.
The revenue engine of our republic is faltering. The first quarter revenue missed the program target by about 4.5%. Oil revenue fell from about 19.8 billion Ghana cedis in 2024 to 8.7 billion Ghana cedis in 2025. And first quarter oil receipts this year were about 37.6% below target. Thus, the 268.1 billion cedis full year revenue target still stand, Mr. Minister? Or are you going to revise it downwards? And if it still stands, from where are you going to close this gap without new distortionary taxes on households and businesses? It's important that we all keep an eye on this figure, the revenue figure that Parliament has approved. And as he delivers the mid-year review tomorrow, we ask ourselves, with all of this underperformance, is he going to review the revenue target downwards? Or if he's keeping it, then the question is, where are they going to close the gap from? Because if it's not closed, they cannot spend on the promises that they have made.
Well, the minority is also accusing the government of creating confusion over Ghana's debt position by publishing conflicting figures through different state institutions. Kojo Nkrumah again argued recent borrowing has already placed Ghana's long-term debt targets at risk and is demanding that the finance minister publish one reconciled debt figure together with the methodology used to calculate it.
The Bank of Ghana is reporting that debt is roughly about 45% of GDP now as of June. The IMF is also projecting that it will get to 53% before the end of this year. Now, given that Ghana's program with the IMF projects debt to GDP ratio to reach 55% of GDP by the end of 2028, the increased borrowing that we are seeing today means one thing, that this target by the end of 2028 is already at risk. And thus tomorrow the minister must present a proper debt sustainability analysis to convince the people of Ghana that all the sacrifice and the work that the people of Ghana went through to reduce our debt burden is not in vain. Colleagues, I'm sure you recall that just yesterday in Parliament, they came for nearly $1 billion approval. And so already, the debt target by 2028 is at risk. The government should not try to hide this reality in the impending rebasing of the GDP. We will fish it out and we'll calculate for you pre-rebasing and post-rebasing what the new debt to GDP will be, looking at the way they've started debt accumulation just 9 weeks after the IMF left town. But it even raises a bigger question. What does the IMF know that the government is not telling Ghanaians? What is included and excluded? And on what GDP base? The review must publish one reconciled figure and one methodology.
Kujo Nkrumah is the ranking member on the Economy and Development Committee in Parliament. High expectations from Ghanaians ahead of the Finance Minister's 2026 media budget review are already building up in 24 hours. So the policy document is expected to outline the current health of Ghana's economy and what to expect in the second half of the year. And my colleague Michelle Latte just returned from the Central Business District here in Accra, where she has been interacting with some traders. Listen to them.
Tomorrow, the Finance Minister will present the mid-year budget review, where he's expected to update Ghanaians on Ghana's economic recovery plans and also the fiscal discipline measures that have been put in place and Ghana's growth plans for the second half of the year. But the major question to Ghanaians is whether the reported gains in Ghana's economy is translating into their lives and what they hope to hear from the Finance Minister tomorrow when the budget statement is read. We've been speaking to some Ghanaians wanting to understand what exactly their expectations are. There's a trader here at just around Tudu and Mokola. Ma'am, good morning. Tomorrow, Finance Minister is reading the budget. Yeah, reading budget or China. Expectations by now.
Economy ni di enya kura, enya maya kura. Ushedwa kura market ni kura ma. Enti yesro mo say omma bibia amra fom. Yadi nyamidi so omo read budget ni ye pa. Na bibia nya kama, na bibia na boko. Na dollar so mla fom.
Okay. Inti eno na your expectations for Ochina budget na ye be reading no. Right. So this particular trader here says that she's hoping that the prices of goods in the market will reduce as the budget is being read tomorrow.
It is been a bit, affordable for us. Still are seen on increase. Some people, opted to increase things on their own. So if the government, can do the best as they can to make sure there's been a bit reduction in the market, will be okay for us.
Oh, I want the government to do better on our finances because I want, like, if I come to market with 1,000 Ghana, I want to be able to get a lot of things that I needed. Right now, these things I'm carrying right now, all these things cost almost 1,200, but look at the things. You see?
The amuka say flate no. Job for my yenima de friend flate. Inflation no. Yenim. Ya mu kanichi anan cry. Eti atwe. Mania manguma ye. Baby dollar list fanita no. Yape. Eti yani more. Ejuma de mu ye.
The station is great. You have to be big because now the system is hard, especially the dollar have to come down a bit so that we can also buy things in town. Now the market is down. The system is getting too hard. So tomorrow's budget, I'm expecting that everything will come down. Then all the youth in the system will also get their market and do so that we can progress in the country.
Well, those are the expectations of traders here in the capital. Artisans and traders at Ghana's largest automobile and industrial enclave, Swami Magazine in Kumasi, are anticipating economic reforms that will bolster their businesses and livelihoods as the finance minister prepares to present the mid-year budget review tomorrow. And my colleague Emmanuel Bright-Kweku is standing by with the very latest. He is interacting with some of them and he's joining us live. Emmanuel, what can you tell us?
Forsen's presentation of the mid-year budget review to Parliament, to the floor of Parliament tomorrow. And we want to know the expectations, especially for the artisans here who form a largest part of our informal sector, contributing some 70% of GDP. And so we want to find out from them what is their expectations and in fact what they make of the economic system currently for the past 6 months into the year 2026. And I'm being joined by some leaders here at the Swami Industrial Enclave, as we all popularly call it as Swami Magazine. And I want to find out from them what they make of this year's system, how the economic policies are affecting their businesses, even their livelihoods. And I'm joined by these three gentlemen. Daddy, I want to find out from you, what do you make of the system now, economic policy? It's been 6 months now. What do you make of it?
Okay, I would like to speak so that my colleagues will understand what I want to tell them. Actually, this thing, budget, era to forcing, or more budget my year from the previously, we agree with them. But as a dollar rate, they be more and reflect it to her. Because the system, the old system are still here. It is almost year budget. Budget, in terms of say between so because normal brain still one of the money the same price. It will be power see the money boy, no money boy, no money boy. But meanwhile, still and the money to dollar no matter once I refer to the Bank of Ghana, but I refer to the magazine. It is they always cry on the dollar. Meaning the reason why my Ghana you should see this, but they be a solid dollar some. If it's all your budget here, you have first see this in your juma. Near dollar 70 because one America crow and man ko issue say also issues see this. Me Kaiser Bank of Ghana can say amount no dey be mo ye bia no. On be issue no see this way they am. But they be this government, the previous government, dollar rate.
But issue Nankasa the same thing.
Yes, so motivated no masomaye. Na ye hotoye. Because all shade the normal, you see a cry we cry on my bay no. As I felt here more. It is someone tell no masomaye bed because it depends soon. Yen ye calling for change, but the change no so no matter. I can't see yes, Ramo, Omunya no my Kokroboti de two abadema, almost a son of memo, because he has also we are restarting everything to us. And yes, Ronkwa, and yes, Ronkwa, almost a son of my, na yes, we are home to a crack, because we'll buy for your piano ID this year. They say, I get a boat 12 for a book of 4 wally, a betras abato. Yeah, Omamba to spare to Omamba to wally. Ade, yes, sir, almost a son of my. Now, say, I come my Japa can say, or Momo Tipajalo make us a case. Eti Omu is sure yes, Rubio. Sagadiba Comu Bia, Lucreni. No say, the Abanamo Muya Koyano Refie. It was more such an Yami, I don't know about that now. Onya no me. Never fretty yen, yes, you only sampa. Yes, it's a bano. I don't mind it, and no my idea, my Kaka is better to catch a bino.
Who said dollar no, dentina moko honoma, a bono potting in Sensemnet to say VAT cry.
Sir, potting $1. American never tried the organa, Hanum, no one know they're going to come back and say, hey, oh, you should see this and obey you see this. No. So no better Hanum or call them because yen. So na me so na say et wo ti be for dollar nko bi market say wo koto ade but ye de ye budget na ye dollar wo de say kira some American so mo dollar di o e wo de budget ni mu a so wo mo dollar di won budget ma parliament mu a o my Ghana ye ti mu no ye di dollar na say this o mo sesa kasa na de no kure ne nya I know more cities in my cities in ye.
All right, sure. And so that's also a concern from an artisan here. He is actually concerned about the dollar rates at the ports, and that is affecting their businesses here. Even though the government claims that the dollar is or the city is appreciating against the dollar, unfortunately, they are not feeling that on their business. I also have this man with me. Daddy, Ochina budget review, and then I walk around.
The American ADK. GRPC law when to say who be any home crying as you be shop our Ghana ha Nanso and penny for a dear any me one time because runs any muda because Hanata and so any muda Minister beer or trade be any woman con any muda who call Biase and GRPC law. Idea and the Sao and so bar na to Press a go in Mahama Eba on Yeshia on Knine, Mikobi. Or so buy ya any 2 months grammar, or my whole Yina, also poor Moduma, and the crown their coso. They say Nigeria breaky, it is Nigeria for Yineba, Yevegana ha, and Kola Mukra, Trog with the mobile accessories. Baku Kran Hoya Ghana ni. Nipa do millions of people and they say Jumano and in Ghana from Kola Yibia and Kebesu say in your Jumanye. Yes, so say Okrum ha. They say emu 80% are foreigners in Kwadia. Foreigners in Nigeria ni bia so of a be a shopper no koi on the cha. No kofa kwale free on the cha no about yes store boy or miansa nyina in Nigeria for
affect mu Jumana. I say Ekwan Benson. Yeah, they affect the motor in Namu. Oje for Oban watch on number one or baby, and they say around the whole Ghana, foreigners no egu adwuma. Abano so ba ka say on my foreigners in we adwuma ya pancho on her number one and ho ye my ya tiba ma zi okay bre pawo ya tiba ma zi hanso ma zi nyina say brigade intra ya sare say ya $10 so ndi nyama boyefo Baba Mazi, they be at in radio, say, a driver fan say, near my boy, the name of boy, then and Yamana, a wife. Yan Chaki, and Yama, I sure a name free, Bodason, a bedroom, Krumha, a castle, Boomso, Yabajuska, Kubase, Yabajuska, every crown now, bedroom, you are also your beduska. It's identina, yen for you now, and we know Jiska. Your bed, a question, you know, look, Masea. We near Mampo. Na customs is now one chain. In the idea, you bear Juma customs in Kwa. You bear Juma say, Yedi and Perry customs in Kwan in India one. The Tanya manifest so more Jinano. One also tia.
Those are the reactions from Swami Magazine in the Ashanti region. Let's do more on this and hear from both the economic and political actors, starting with Professor Godfred Bokpin. He's an economist and a lecturer at the University of Ghana Business School, who says the media budget must outline clear plans on how the government intends to sustain the economy beyond the 17th IMF program.
We've made some good progress under the 18th IMF supported program. Actually, we have been saying the 17th IMF supported program, but on the IMF website, this is the 18th program arrangement with Ghana since Ghana officially joined the IMF on September 20th, 1957. So that means a lot for us, but I think more importantly is how we are going to sustain the limited gains that we have made under the IMF supported program and what measures government will put in place, maybe perhaps beyond the policy coordination instruments. Of course, to date, we actually don't know the number of policy reforms that are in the PCI, and therefore we are unable to make impactful assessment of what that would mean for us going forward. The expectation would be that the government will use a media review to give us a little bit more updates on especially on the whole IMF supported program. As we exit, we know that probably the board will be meeting maybe on 29th of July or so to consider the final review, and then also what the way forward will be. But we do know that there are structural weaknesses in our economy, and despite that, this current program has restored debt sustainability. We have essentially moved away from.
That's Godfrey Bobkin there. He's a professor of economics and Deputy Director of Operations at the Presidency. Mustafa Gbande says the review must focus more on government expenditure plans.
Last 1.5 years, unlike before, we have been doing as a government a cleanup, restructuring what used to be the normal play of things.
Right.
Where we come, we float in money, people take contracts and they inflate the contracts, and institutions are overspending, they are spending anyhow. In the last 1 year, have been a deliberate policy framework targeted at regulating expenditure. Regulating expenditures that money can be saved to pay off some of the commitments that is hinging on the neck of the country, to free space for government to build. And so I have never committed, or I've never regarded the 2 years or the 1 year, 8 months of our government as a proper governance stage. I see it as a process, a stage of cleanup, where all of us must hold ourselves responsible for where we are. Because we've allowed the politicians to, go away with a lot of things. And so governments come to power, institutions are spending without priority. Today, the significant celebration that we must accord to President Mahama's finance team, from Gold Board, from Bank of Ghana, to the Ministry of Finance, is the fact that institutions no longer spend without proper scrutiny at what they do.
Meanwhile, the deputy ranking member of the Finance Committee in Parliament, Stephen Amor, says his side in the House will do everything to keep the government in check.
One of our core functions is to scrutinize government policy, ensure that we put government on course to conform to the PFM Act, and then also make sure that our operational rules and then our fiscal anchors when it comes to debt sustainability anchors, and then our even targets in these areas, our primary balance target, and then our debt sustainability targets and other things are conformed, and then the requirements of the PFM Act. And also to manage the exclusion clauses very well, because sometimes we take undue advantage of the exclusion clauses, and then we actually kind of undermine or underperform our compliance when it comes to what the legal tools require of us or require from us as a state. So Finance Committee, we're going to be very, very, very resolute. We're going to make sure that we become watchdogs and make sure that the government does the right thing. And this is what we are going to do. And of course, we're also going to be very supportive and make sure that that fiscal discipline that we need as a country in terms of our expenditures and other things, we keep to that. So we are going to work closely with the government, but make sure that we are going to be very fair, both minority and majority on the committee. We are not going to toy again with some of these executive policies.
When we return from the break, we'll take you to the courts. See you in a moment. You're welcome back. Flanked by prison officers, the jailed Ashanti Regional Chairman of the MPP, Bernard Ntribuesi Ako, popularly known as Chairman Wuntumi, made his first appearance at the Accra High Court in a prison bus after spending 2 nights in custody following his 20-year prison sentence over the Samra Boy illegal mining case. On Monday, the embattled politician, dressed in a neatly tucked white long-sleeved shirt paired with black trousers, was ushered into the courtroom through a rare entrance in an apparent attempt to shield him from public view. Let's now take you live into the courtroom as to what happened there, and the person who was there for us today was Fatal Bayaga. He's joining me in studio. Fatal, give us a pictorial evidence of what happened in court today when Wontumi, first of all, came in. How was he looking like?
Ken, the Wontumi I saw today is different from the everyday Wontumi who always appeared before the Accra High Court. And in fact, when he came into the courtroom, this man was looking grim, gloomy, and somber, right? And in fact, Ken, Wontumi mostly comes to court, using that his recently acquired trademark, clock it, and all of that, waving at people and all of that. But today, it was a different thing altogether, because he was very calm, he was quiet as he sat in the courtroom just to, briefly listen to what happened in court today. So, Ken, there was so much difference when you're talking about Wontumi. The Wontumi I knew before this judgment and the Wontumi who appeared before the Accra High Court today. There was there was vast difference.
Wontumi spent a few minutes in court before the case was adjourned. What happened?
Absolutely. So he was in court because of the Tanonimri, illegal mining case, one of the high-profile illegal mining cases that he has been prosecuted for. And basically, he came into the courtroom, and today it was scheduled for cross-examination of the third and final, prosecution witness. So when Wontumi came into the courtroom, he was told that his lawyer and the Apiakubi had written to the court that he wouldn't be available for this particular case to continue. And I was quite surprised that, and the Apiakubi wouldn't inform his client. Yes, we know that now he's in prison, but then could have informed the prison officials that he wouldn't be available. But they only got to the courtroom, and then the trial judge, Ruby Ayiti, then informed them that your lawyer brought a letter and said that he wouldn't be available for this particular proceedings. So basically what he did was to adjourn this case to the 31st of July, where they'll be back again for the cross-examination to continue.
That's quite interesting there. Aside from Wontumi, though, the embattled former CEO of the Bafa Stock Company, Abdul Wahab Hanan, was also in court today.
Absolutely, Ken. So, former Attorney General Godfrey Addo, who is the lead counsel for Hanan, was on his feet and, Criminal Court 3, which is also known as the Specialized Court 1. And basically in that room, what he said was that the charges that the prosecution has preferred against his client, he said these charges are, fatally defective. They are in contravention of his client's right to fair trial. In fact, he also explained that they are vague, they are overbroad, among other, things that he talked about these charges. And basically, he's seeking the powers of the court to strike out these, charges. He said that if the charges are used to prosecute his client, then it means that the trial will not be, fair, right? So when he made that point, then the Deputy Attorney General, who represented the prosecution, was on his feet. And basically what he said was that he strongly opposed the motion being pushed by the defense, and his reasons are that the charges are very clear, they are understandable, among other things. So when he made that point, then the trial judge, Francis Apanga Chibonga, listened to all the arguments and said, tomorrow, let's come, and then I'll deliver a judgment on this. So Ken, tomorrow, the 23rd of July, Francis Apanga Chibonga will deliver a judgment on that motion. And what happens? If he upholds the motion, it means that the AG would have to go file different or new charges. If he dismisses it, Hanan and his wife, the trial will continue from there.
Interesting there. Thank you very much, Fatal Bayaga, reporting to us from what he witnessed at the courts today. Away from the courts, let's talk education, because the country's education system is set for significant changes following their presentation of a revised national curriculum designed to address learning gaps and better prepare learners for the future. The National Council for Curriculum Assessment, NACA, says the review follows a comprehensive evaluation of the existing curriculum, which identified major learning deficiencies, particularly in maths, Ghanaian languages, and other core subjects. The revised curriculum introduces 4 major structural reforms, including the integration of computing and coding, greater emphasis on ethics and values, and expanded opportunities for foreign language learning. Speaking at the presentation, Executive Secretary of NACA, Professor Samuel Ofori-Bequin, said the reforms are intended to produce a value-based curriculum that equips learners with both academic knowledge and the skills needed in a rapidly changing world.
We did a curriculum mapping to identify what we have to do. So, Honourable Minister, basically 4 major structural changes have been brought into this review curriculum. One is the consolidation of civic learning and competencies. It used to be across many subjects, but we're looking at, because we didn't want to introduce any new subject to overload the students, we're looking at a subject that can hold all these competencies, being the knowledge, the attitudes, the values, and then the skills that learners need to become effective civic participants in the Ghanaian economy. And so we went through the old curriculum and realized that in the past there was this subject, citizenship education, that was silent, and then work was brought. But we felt that a consolidated subject that can take all these things together, history and all these things together, better sits with citizenship education than what was previously there. So we are proposing with what we are submitting that citizenship education should be the subject that will consolidate all these civic competencies and learnings that will make our learners functional. The other thing that we also added based on your instruction is with the computing and mathematics. We deliberately have introduced aspects of coding. So in computing, it's called computational thinking. In mathematics, they call it quantitative thinking, which are the basic skills that learners need to learn to grasp the concept of coding and then automation and AI going forward. So we have taken care of that.
Let's get talking on this. And Stephen Mensah was at that particular press conference, is joining me in the studio with more. Stephen, one of the key changes is the introduction of coding and computing. Tell us about it.
For NACA says that this is to ensure that pupils get an upper hand, as we understand that the world is rapidly changing in the technology space. He says it's to give the students and pupils an upper hand. And in the system, and together with STEM, they're going to teach the children how to identify patterns. You would understand that coding involves some languages. Python also involves some languages.
Right.
And this is just the basis. It's to ensure that the pupils get an upper hand. They're able to adapt to the rapidly changing world.
And then the curriculum will also be providing the opportunity for students to be able to study Chinese language.
That's right. So the Director General, that's Professor Samuel Bequin, he says that with this language, Confucius Center is going to start this pilot project with 10 schools, and then it's going to expand as it goes on. And this is purely optional. This is to ensure that students, as a matter of fact, get an upper hand again. For them, they would want the students to understand the language, given that understanding the language gives an upper hand. You get to understand and be able to have better conversations everywhere you go. So students are going to be taught this optional, but then Confucius Center is going to lead this project with 10 schools for the start. We can listen to him.
Looking into the future. The other day it came out clearly that now Ghana's major trading partner is China. Many people go to China to do all kinds of trade and all those things. And so we felt that if we are to give opportunity, it's not compulsory but an option for people who want to learn Chinese, would that be okay? We did that because already the Confucius Center in Cape Coast had taken the lead, had come to us and had collaborated with us to work on some kind of curriculum for the basic school. So we thought that it would be important to bring that on board and also propose it to government as an additional foreign language that if the resources are available and the schools that have the teachers can start. The Confucius Center says that they are ready to sponsor about 10 schools for now to start as a pilot. So they are ready to come to GES for GES to give them suggest those schools so that they can pilot. They have trained teachers who can handle the 10 schools at the beginning. So that is what they have. And then also we found Arabic. Although had been in the system for long, but there was no standardized curriculum for Arabic. Different schools were using different Arabic curriculum. So this time also we have standardized the Arabic curriculum also from P1 to P6. And the other structure change is assessment. We deliberately have made formative assessment as a core issue in the curriculum.
Stephen Mensah is still with me in the studio. Stephen, we've also been hearing from the sector minister, Haruna Idrisu. What has he been telling you?
Well, Haruna Idrisu interestingly says that if he wants to be remembered, and I quote, if he wants to be remembered as one of the best or the best education minister, this is the reform he would want to be remembered by. The reform, the revised curriculum. And he says that he's going to ensure and has given, in fact, given the Ghana Education Service a week's ultimatum to provide some structural framework and administrative framework for the implementation of this program. And he believes that this is one of the most revised and best curriculums for the country currently. We can listen to him again.
The GES is given 1 week from today to review and bring the curriculum up to full implementation readiness and strict quality standards. This will ensure that the GES as an operational agency takes ownership early to guarantee smooth execution in the classroom and align administrative policy with classroom realities. I am particularly enthused that today, as we remind the GES, I heard the Director General of NACA on the medium of teaching and learning from kindergarten to basic year 3. And accordingly, I accept your recommendation that Ghanaian language be the medium of instruction from kindergarten to basic year 3. Learners at this level will be taught to read in a Ghanaian language. English language will be taught as a subject with an explicit emphasis on play-based oral activity. This is because grounding early learning in a child's native language significantly improves cognitive development and reading comprehension, which actually accelerates second language. And the media don't go and report that I'm saying that English is a second language. I'm saying that at the basic kindergarten level, English remains Ghana's official language of medium of instruction. But at the basic level, from basic kindergarten to primary 3, our emphasis will be on the use of the local language.
Well, Ghanaians have had the promise, a 24-hour economy, jobs multiplying across shifts, industries running round the clock. But out there on the streets and in Parliament, the question on everybody's lips is simple. When does it actually start working? In Parliament, minorities, Kojo Opon Nkrumah has already questioned what nearly 650 billion Ghana cedis in government expenditure has actually delivered under the program, but the 24-hour economy secretariat has pushed back, insisting the program isn't being financed from that budget figure at all, that it runs largely on private sector investment, not direct public expenditure. So who's right, and more importantly, when will ordinary Ghanaians start to feel the difference? Well, today I put that question directly to the man who can help us answer them, the Chief Partnership Officer at the 24-Hour Economy Secretariat at the Office of the President, Dr. Ishmael Ni Dodu. Dr. Dodu, welcome to the program.
Thank you very much indeed.
We've heard times aplenty about this 24-hour economy, 24-hour economy. When does it start? Ghanaians are asking. Has it even started?
Well, as you know, July 2nd, 2025, the program was launched.
Looking to level up your life and business game? Welcome to the #1 podcast for business and self-development. Connected Mind.
Is in terms of his vision, his ambition, and what he's going to do to drive the ambitious economic transformation agenda that we set ourselves, all within the context of the resetting agenda and so on. And the 24-hour economy is a catalyst for industrialization, for export promotion, and ultimately to create about 1.7 million jobs. That's what we set ourselves to do. And it's about an economy that will work for everyone, every hour of the time. And so right from the July 2nd, when the program and policy framework was set out, that's when it started. And before that, we spent between January to June consulting with nationwide, particularly with beneficiaries of the 24-hour economy, people on the street, market people, GUTA, AGI, GEA, all across the various sectors of the industry, and with academia and with civil society and everybody. So be able to frame this program that we believe is what Ghana needs. And it's really the antidote that Ghana needs. We also spent time to look at all the policies of government from 1960 all the way till date. And we asked 3 questions: what worked well, what didn't work well, and how could we improve? So we extracted a lot of lessons. We also look at countries that have implemented such similar ambitious agenda, particularly Singapore, because we always try to look at Singapore and Ghana in our trajectory of economic growth. So we looked at Singapore, we looked at Vietnam and what they're doing, which is very, very interesting. We looked at Chinese economic revolution, and we also look at our countries in Africa, such as Egypt and Rwanda. And we learned some very good lessons. So the program, if we look at the policy program document, it really frames very strong approach to what we have to do. Critical analysis of the Ghanaian economy, the key areas where we have to stimulate jobs, and the key areas where we have to strengthen industrialization. So we started, and we are working very hard around the clock. As you can see, I'm 24/7.
Oh, are you? Good. Yeah, the promise was to create 1.7 million jobs, the 24-hour economy.
In 4 years, yes.
Yes, in 4 years. Since its inception on the 2nd of July, per your words, 2025, how many jobs has it been able to create, the 24-hour economy?
If you look at the recent statistics from Ghana Statistics Services, you looked at the unemployment rate has really drastically reduced from 14.1 it was to 9.4, and today it's about 6.4. We are trying to move it to something around 5%. So it shows that with the unemployment rate reducing, it shows that the number of jobs have become. Now, what we are doing is really, number one, to lay the foundation in terms of providing an institutional setup, looking at the obstacles that are militating against the industrialization vision that we have, in terms of addressing things like energy, the incentives, the issues around land, the issues around patient capital that can stimulate small, medium enterprises to go on the market. We have to lay those foundations very clearly. And one of the things that it was really on the minds of people is that when you start a wonderful, ambitious program, which are set to deliver tremendous and magnificent outcomes for Ghana, then, regime changes and then we scuttle it. So it is extremely important that this becomes an agenda, a blueprint transformation agenda that provides a clear developmental pathway for us. And so the institutional structure of the 24-hour economy authority is very, very important. And we'll spend a lot of time to do that. And within a short possible time, we are able to establish that through an act of parliament. So that's a tremendous work that actually went into that. And then the other one is really some of the obstacles that would militate against industrialization and creating the jobs and the ships and things that we have talked about. Critical to energy. As we said, we have set out an agreement with a very major producer of energy that is investing close to $11.5 billion of renewable energy, and an energy that will cost between 6 to 9 cents per kilowatt hour, so that it will make our manufacturing very competitive. I mean, these are very, very important undertaking that becomes greatly the foundation that you need to lift up in the industrialized setup. We are only 1 year old, but we have been able to set the foundation for fast-track implementation, which we are doing at the moment.
So you're not able to tell me the number of jobs that has been able to create in 1 year? Because the 2nd of July 2025
right.
to the 2nd of July 2026, that's 1 year and a few days.
Yes.
Can you give me an approximate figure of the number of jobs you've been able to create?
Well, you know, the 24-hour economy program is very clear. In the sense, it's very clear that we work in the private sector to be able to create those jobs. Now, what I've indicated to you, that when you look at the unemployment rate, it just tells you that with it lowering means that jobs have been created. Now, the number, we have about 33 industries who are actually running the ships and running in 3.
Okay.
And they, they in those spheres, they also have, they have people that are working shift 1, shift 2, shift 3, and those jobs have been created through that. But I can tell you what some of the jobs that have been created in government. So we have the Ports and Harbours Authority that are running shifts, and they have created quite a number of jobs. I wouldn't be able to give you the specific numbers because we don't run the industries, and I may err in the numbers that I will tell you. But what I can assure you, and which you can validate, is the fact that once you have unemployment rate moving downwards, as it is going, it translates into a certain number of jobs. And those number of jobs, you can extrapolate them from the Ghana statistics.
But at the same time, though, we also have unemployment rate among the youth also going up. It's now more than 30%. At least the latest figures that was given to us by the National Development Planning Commission shows that there's been an uptick in youth unemployment in the country. So really, if this one is creating jobs, is it going to people who are not younger people, if we are to go by the statistics provided to us by the NDPC, or you're not able to tell us?
No. The jobs, the 24-hour economic program is targeting necessarily the youth and employment situation. The jobs that we are able to create as we roll out some of these projects, if we look at the jobs that will be created through the BoG solar energy complex, is about 130,000 jobs, which has been estimated. The jobs that we provided by the Carbon oil complex, that is producing 40,000 crude palm oil into various derivative of products with serious uptakes in the industrial setup, is close to about 100,000 jobs or so. So there, for the industrial parks we're building, the agroecological parks that we're building, the projects that we develop that today are very investable, bankable projects that are going to be on stream in the next few months. We'll be able to tell you the job estimation that is going to happen. And those job estimation, this year we're looking at probably about 500,000 jobs if we're able to hit those. If all of them come on stream, this is what's going to happen. Now, they are targeting youth. These jobs are actually necessarily targeting the youth unemployment. They are in the types, they are in the types of skills or variety of skills in industry that we are looking for. So we're talking about those in the manufacturing sectors, those in biochemistry, those in mechanical engineering, and so on and so forth. So those will be able to tell you those statistics in terms of even skills, how they're going to do it. One of the things we are doing is to be able to come out with a digital framework across all the countries nationally, where you will see where the jobs are in terms of skills required, whether in each of the regions, the type of jobs, the companies and so on, that you can apply and be able to get the jobs. We want to be able to facilitate, as we create the jobs, We want to be able to facilitate the youth to know where the jobs are created so they can also apply it to those.
You tell me that over 300 industries are now enrolled onto the... 33 industries are enrolled onto the 24-hour economy. You've already mentioned the Ghana Ports and Harbours Authority.
This is a government agency.
That is
so
a
these
government.
are private 33, and then we have about 268 filling stations now which are rolling out 24/7 with NPA.
The filling station is where the minority raises concern that already filling stations, most of them are running 24-hour economy. So how can the Secretariat claim that it is through your 24-hour economy policy that is why these filling stations are running 24-hour economy? In fact, just today, the ranking member on the Economy and Development Committee rehashed it in the press conference they held at the party's headquarters. How do you respond to that?
I would say that that's largely incorrect, because we met with the downstream petroleum services and we've been working on this for close to 3-4 months. They're not working 24 hours. They have significant challenges in running 24 hours. Things around security, for example. And then they also need a traffic to be able to do that. So there was serious studies around these things. And we engage the Petroleum Downwind Petroleum Stream, the association, the MPA, 24-Hour Economic Authority, and all the security services that are there. Police, immigration, and so on, looking at borders, and so that we'll be able to create a scenario that will provide security for them to be able to function. Then digital services. They are piloting with different types of innovations, including, for example, not using cashless filling stations, so you can use Momo to pay for the purposes of that. You need to be able to run this pilot to see how it's going to fare in its entirety across the nation. Of course, there may be regions where you have to start very, very slow, and there may be areas like, for example, in Accra, where there are traffic, or Accra, Takoradi, Cape Coast, or Kumasi, where there are traffics on the roads, that you'll be able to start big. And this is what we've done. And you see it's all in the news. So it is quite incorrect to say that they are running 24/7, because I mean, you know it. You will go out and enjoy yourselves and coming home, and you are short of fuel and you can't go to a filling station, some filling stations, to be able to get it. But we are now having about 268 of them making very, very available to you.
How are they distributed? Is it largely in the urban centers, Accra, Kumasi?
It's urban, peri-urban for now, and then you keep moving.
Okay.
So it's a pilot scheme, and they learn as they go along, and then they roll out and scale up very, very, very strongly.
So you mentioned that you are assisting with security.
Security is part of it.
Okay.
Yeah. So if you see today, the CEO of MPA, 24-Hour Economy, and the police service, and there is also the ambulance service, and so on. It is to make sure that they feel comfortable as business people rolling this 24 program out, that there's security for them.
Yes. Okay.
And this includes the oil producing companies as well.
Okay. Your secretariat has firmly rejected the idea that more than 600 billion cedis cited in Parliament is financing the 24-hour economy. And, of course, those concerns were raised by the minority. You're saying that it's private sector driven instead. Can you clarify then where that 650 billion Ghana cedis was spent?
So in our press release, we explained that the 650 billion Ghana cedis was the budget appropriated for all programs, by government. So all types of initiatives, whether in Kukun Kitinkiti or 24 programs initiative or other types of programs that government with public funds is stimulating, this is the appropriation for it. So it is not true. It's incorrect that this is what has been appropriated to the 24-hour economy. Now, what government, we're very clear when the program was launched, that private sector will lead and government will stimulate this, or we enable the 24-hour program to take off. So the budget we have appropriated for government is to look at, number one, paying for operational costs of setting up the secretariat, having the capacity that you need to be able, and the logistics to be able to do your work. And then the second one is viability gap funding for project preparation. Mind you, to attract the needed investment or private sector interest to be able to invest in the strategic programs that we put in place in the agroecological parks and industrial parks, which we are setting up to be able to, for example, look at accelerating the industrialization process. You would need government to put a skin in the game, and the skin in the game that government put in is these funds that goes into project preparation for bankability and a viability gap funding as we set up a small purpose vehicle, so that you have some funds in it to attract the private sector to it. And we are working with Ghana Investment Infrastructure Fund, which have got tremendous record for being able to turn around within a ratio of 1:10, whatever funds that you put them to attract the needed private sector funds into it.
The minority again is challenging the 24-hour economy secretariat that as we speak right now, there's not a single government agency that has employed more people to run shifts, because the slogan of the 24-hour economy was 1 job, 3 people, 3 shifts.
Again, that is incorrect. You can validate if Ghana Ports and Harbours Authority. They have all the figures there to tell you how...
So let's take them one at a time.
Right.
So the Ghana Ports and Harbours Authority that you mentioned,
yes,
are they now employing more people?
They've employed more people
because of the 24-hour economy.
Yes.
Where else?
DVLA has done it.
Has also employed more people
because we run ships.
Okay.
Then the health services as well have done the same.
Where exactly?
I mean, Ghana Health Services.
Okay.
The hospitals and things. There are a number of government agencies that are doing that. Of course, it's not.
But the hospitals are already running 24-hour services.
They expanded 24 services.
Okay.
Also, if you look at some of the recruitment that were made in the security sector, also take into account, for example, the police has got a huge program called Policing the 24-hour, and that comes with capacity. So some of the services recruitment that are happening, and the immigration and so on, is taken into account the capacity they need to be able to do these services.
Does the 24-hour economy secretariat run 24 hours?
We run 24 hours.
Do you?
Yeah.
So you're running all the time?
Well, we work all the time. Anytime, I mean, whenever you can reach out to us. We always...
So can I walk into your office at 2 a.m. and find people?
Well, you know, the issue is this. We are, as a secretariat, providing administrative oversight and pushing this agenda and policy. Whatever you need, we'll be able to help you out.
Okay.
Yes.
Would you say this has been a success or a failure 1 year down the line since it was formally
Tremendous
implemented?
success. Tremendous success. For example, now, if you tell somebody I'm going to build a house, what do you measure him by? You measure him by the house, by the building, or you measure him by the deliberate strategy and intentionality making progress towards building this house. You in the media, you always say Rome was not built in a day. How then do you imagine that such an ambitious program of transformational nature would just come by dint of pronunciation? No, you have to work at it. So you measure our success by the number of things we've done. Number one, the policy and development framework to be able to structure the vision for us to see, to know where we are going.
Okay.
You measure us by the number of investment that we are able to attract, and the projects that we're able to develop that are bankable, that enable the investment to come in to get the private sector to move in. Within 1 year, we're able to attract about $11.5 billion foreign direct investment. That's a very huge undertaking. In some countries, the FDI by a government agency to attract it may probably, at a scale of 10 billion that we talk, 11.5 billion we're talking about, would have taken them 4 years. We've done that in less than a year. And the other point is our anticipation of the real obstacles that are militating against our industrialization process. You want to create jobs, you must build the industries. You must create new avenues for jobs. You must build, and then working with markets, working with industry to be able to address some of the things that make them inefficient.
Right.
So anticipating these obstacles, putting energy around that, structuring solutions for it. These are the things that you measure any ambitious program by in terms of success. Right. It has to be incremental. And we believe that within the first year, we laid a very solid foundation. Now, when incentives are legislated and they come on board, the private sector will take it immediately. The other thing is getting the cheap patient capital available also for small medium enterprises to be able to get the vast amount of powerful made in Ghana products to be in our markets. You cannot import $350 million of yamwaje every year. It's such unacceptable in an economy. We have to be able to substitute that.
Dr. Diodi, we have to go, but this will be my final question for you. Yes. Final one. The promise, of course, was that you were going to help create 1.7 million jobs. Yes. 1 year down the line, that means that every year there has to be an approximate figure of 425,000 jobs. 1 year down the line, would you say that those estimates have been met? 425,000 jobs have been created through the...
No, we started slow, so we have not met those estimates. But I believe that we'll be able to create probably a third of it. But by the time we start accelerating the establishment of industrial parks and so on, and some of the projects that are online, that I've talked to you about, we'll be able to meet this. So you measure us by the number of jobs by December. We'll be able to tell you exactly how many jobs we'll be able to create.
Thank you very much. Dr. Ishmael Dodu is the Chief Partnerships Officer at the 24-Hour Economy Secretariat.
Thank you.